Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going over the long anticipated Fundrise update for the first quarter that I've been invested in Fundrise. So I actually invested $1,000 of my own money. I'm kind of like your own financial guinea pig. This is not a sponsored video. However, if you do want to join Fundrise, support the channel by using my link below. So we're going to be at the laptop again. I know a lot of you love the whiteboard, but the laptop really is the easiest way for me to show you all this information easily and concisely. We're going to go over the performance so far of that $1,000. I'm going to show you an Excel spreadsheet because I do want to annualize the returns, which is typically a financial no-no, especially for a period less than a year, but I do believe it's a fair shake for Fundrise. And then also we're going to talk about taxes. So if you're a guy that can't get a date, this is what personally worked for me when I was in the dating scene. Excel spreadsheet skills, baby. The women will flock to you. They'll be on you like a fly on. Okay, so I had to throw that Excel joke in there. If you've ever worked in Excel or had a job that requires you to sit in Excel, definitely not that exciting. You're not going to be the James Bond of Excel, okay, with all the ladies flocking to you. So without further ado, let's go right into what the Fundrise account has done. As you can see here, this number doesn't look overwhelming, but after I show you the Excel spreadsheet, you may change your mind, okay? So you can see here that $1,000 over the course of essentially 109 days netted $32.47. So if I go into performance, you can see here basically that I'm invested in 107 active projects. 54% of those are debt, 46% is equity, and we can actually get into the reporting net asset value here, okay? So basically, this is everything that I'm invested in. So you can see here that there's a partial 2019 column, and then you can see the 2020 year to date, and then you can see the all-time all the way to the right. The number that matters down here is basically the return, the weighted average of 3.2%. But keep in mind, you guys, we are only going from a period of just roughly over a quarter, okay? This is not some investment that we've been invested where the dividends are compounding and it's had all this time to grow. This is literally just a 109-day investment so far with a relatively small sum of money, okay? So you can see the first day of investing was September 26, 2019, and then basically the portfolio started to go from there. And you can see my net returns. You can also see the cash that I had in and the cash that I had coming out, and then also the dividends earned. So this is pretty cool. You get dividends, I have them being reinvested, and I passively made about $16.62 just in dividends over those 3 months. So keep in mind, you guys, it's $1,000, okay? We're not investing $10,000 or $100,000, it's $1,000. So the next screen I want to show you is actually the Excel spreadsheet. So give me 1 second to change it. Microsoft Excel. And we're actually going to annualize these returns. So the original investment date, as I showed you, was 9/26/2019. If you want to figure out the exact number of days, you just put in the today function, close the parenthesis, subtract it from the date that we just invested in, and boom, 109 days. P0 essentially means the period that you initially invested, what was the amount. So the amount that I initially started this Fundrise investment with was $1,000, okay? Pretty simple so far. Now, P3, well, it says 3 months, it's really 109 days, is asking for what the ending amount was, or what is your investment now, at which we can see is $1,032.47, okay? So the period of return is very simple. You just take your ending investment amount divided by your beginning investment amount minus 1, and that gives us a return of 3.247%, so 3.25. So if you remember what it was with the Fundrise, and I gotta share the screen here again, you can see here that it basically says 3.2%. Okay, so our math is correct so far. So let me go back into the Excel spreadsheet. Okay, let's figure out what our effective annual rate is. So we know that there's 365 days in a year. Okay, that's what we're trying to solve for. So we're trying to understand how many periods of 109 days goes into 365. So I'm actually going to ask you what the formula is and answer in the comments below. What number would I divide into what to figure out how many times 109 goes into 1 year. So I'll give you the Jeopardy music, or pause your screen. Do, 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 do. Okay, you take 365 divided by 109. That means that 109 goes into 1 year. So the period that we've been invested goes into 1 year 3.35 times, okay? So to get the annual percentage yield, you simply just take the number of periods, so this, times the period rate, and boom, our annual percentage yield is 10.87%. So this is starting to look pretty attractive, a lot better than 3.25. However, this is not our effective annual rate. So for the effective annual rate, what you want to do is you want to take 1 plus the, I believe it's the period rate, yes, to the caret of number of periods in a year minus 1. Boom. That gives us our effective annual rate of pretty much 1.29%. So this investment is looking a lot more attractive than 3.25, okay? However, again, it's not best practices to annualize a rate less than 1 year, okay? That's typically used to understand, compare 2 different stocks or 2 different investments over multiple years of performance, and then you can see which one is quote unquote, you know, better, okay? So with that being said, I just thought that was pretty cool because think of it this way, you guys. It doesn't sound like $32.47, you know, over the course of 3 months or 109 days is a lot of money. But when you look at it from a percentage standpoint, that actually isn't bad at all, okay? So let's go back to Fundrise. And the reason why I wanted to show you that is just because this is just another way to diversify your portfolio. So I know it's inevitable. I'm going to get the comments in the comment section saying, well, the S&P 500 over the same period annualized was probably, you know, 30% or somewhere in the neighborhood of, you know, 20-30%. It's good to diversify your portfolio with other things outside of just equities. That's the reason I'm investing in stuff like Fundrise, because you're investing in an e-REIT. Okay, remember, it's an electronic REIT. When you're driving around and looking at all these different projects, you can actually say, hey, look, this is my portfolio. I actually own, you know, XYZ project, in Buda, Texas, in Los Angeles, California, in Brentwood, Maryland, et cetera, et cetera, et cetera. These are all things that I quote unquote own. So when I drive by with my friends in Tampa, Florida, I can say, hey, look, I own that apartment renovation. All joking aside, this actually puts you, or actually shows you all the active projects you're in, and you can actually go through them one by one. And I'm not going to do that for this video. This video is just to show you the return. So finally, let's talk about taxes, okay? Because this gets asked a lot, and taxes are important because sometimes you can invest in tax-free municipal bonds. Sometimes you can invest in things that are a little bit more tax advantageous. Fundrise, this is coming straight from their website. You're basically going to get taxed on 3 different ways, okay? So you have ordinary dividends, you have qualified dividends, and then you have a return on capital. So whenever that divestment of the investment happens, it's most likely going to be on return on capital. Until then, you have ordinary dividends, which are typically going to be a 1099, which are going to be taxed at your ordinary income rate, okay? So this is kind of like the big killer, if you will, for any return, okay? Because whether you're a seasoned investor, whether you're investing in index funds, whether you're investing in stocks, you're going to get hit with capital gains tax. And depending on the investment you're in, you may get hit with the ordinary income tax rate, okay? So with all that being said, that's my update, you guys. It's nothing special. You're investing in real estate. It's another way to diversify your portfolio outside of equities. So it's always good to own a little bit of tangible real estate, always good to own equities, always good to own bonds, and then always good to own alternative investments. And I'm just putting this as one of the real estate investments in my current portfolio, as I do not own any physical real estate at the moment. If you want to see the real estate I used to own, go check out my video. I have a video about that. So hopefully this was helpful. If you want to support the channel, click on the link in the description below if you want to sign up for Fundrise. In my opinion, it's one of the best real estate investment services in terms of e-REITs, and it's 100% passive. I literally did not do anything to earn that $30-something, and I will most likely be adding to this $1,000 over time. Okay, thank you so much, everybody. As always, have a prosperous day.